What if the single most telling currency cross in Asian European Forex markets right now told you that global risk sentiment is balanced on a knife's edge? That is precisely the situation on this Sunday morning, the 26th of July, 2026. The euro to Japanese yen cross is locked in a tight consolidation pattern just beneath the 187.00 mark, a level that has proven stubbornly resistant to upside breaks over the past several trading sessions. Bulls are circling, momentum is leaning in their favor, and the next move could arrive sharply and without much warning. If you trade euro to Japanese yen or simply follow euro and yen movements as part of your broader market analysis, the setup right now is one you genuinely cannot afford to ignore. In this video, we are breaking down exactly what is happening, why 187.00 matters so much, and what the realistic path to 188.00 looks like from here. Stay with us to the very end, because the Outlook section contains the clearest picture of what to expect in the coming sessions. To understand where euro to Japanese yen is heading, we first need to appreciate how it arrived at its current position. Over the past several trading sessions, the pair has made repeated attempts to break decisively above 187.00 and has been rebuffed each time. The structure of these failed breakouts is telling in itself. Buyers have consistently reappeared at or near the 186.50 level, demonstrating genuine demand beneath the current range. This is not a pair in freefall, it is a pair that is being accumulated quietly before a potential move higher. On the euro side, the single currency has been underpinned by a relatively stable backdrop across the Eurozone, with no major negative economic surprises capable of dragging it sharply lower. On the yen side, ongoing uncertainty regarding Bank of Japan policy has kept investors cautious about aggressively buying the yen, which in turn has provided a consistent floor for euro to Japanese yen. The result is a cross that is consolidating with a slight upward tilt rather than drifting lower, and in Forex analysis, that distinction carries real significance. From a purely technical standpoint, the chart picture for euro to Japanese yen as of the 26th of July, 2026 is nuanced but broadly constructive for those positioned to the upside. On the 4-hour chart, price is holding above its key moving averages, which remain aligned in a gentle upward slope. This alignment tells us that the medium-term trend is still pointing higher, even if short-term price action shows hesitation just beneath 187.00. The relative strength index is sitting comfortably above the 50 midpoint, confirming that bullish momentum has not been exhausted, without having crossed into overbought territory above 70. This combination gives the bulls theoretical room to push further before momentum becomes stretched or overextended. The key level to monitor on the upside is 187.00 itself. A confirmed close above this level on the 4-hour chart would represent a meaningful technical signal, opening the pathway towards 188.00. It is worth noting that 188.00 also aligns with prior swing highs in recent weeks, making it a logical target for the bull camp and an equally logical profit-taking zone for short-term traders. No credible analysis is complete without a clear-eyed view of the downside risks, and euro to Japanese yen is certainly no exception. Should the bulls fail to clear 187.00 convincingly in the sessions ahead, the first meaningful support sits in the region of 186.50, which has acted as a demand zone on multiple occasions during the current consolidation. Below that, the 186.00 level carries considerably greater significance. A clean break and sustained close beneath 186.00 would shift the short-term technical bias from bullish to neutral at best, and would likely open a path towards the 185.50 area. The 100-day simple moving average is also worth tracking on the daily chart. Historically, it has provided dynamic support during pullbacks within uptrends on this pair, and it remains intact at this stage. As long as euro to Japanese yen continues to hold above these key markers, the bullish thesis stays in play. However, traders should always have their stop-loss levels clearly defined before entering positions in a consolidating market, precisely because consolidation environments are prone to sudden, sharp reversals in either direction. The euro to Japanese yen cross does not move in a vacuum. It functions as a barometer of how global risk appetite is being priced across two major currency blocks simultaneously. When risk appetite is firm and investors feel confident about the global outlook, they tend to reduce their exposure to safe haven assets such as the Japanese yen. That rotation away from the yen pushes euro to Japanese yen higher. When fear grips financial markets, the reverse happens. The yen surges as capital floods into safety, dragging euro to Japanese yen sharply lower. The current consolidation around 187.00 is therefore telling us something important. The broader market is genuinely uncertain about the near-term risk outlook. There is no clear wave of panic driving yen demand, but equally, there is no strong surge of optimism pushing investors firmly away from safe havens. For anyone with exposure to European or Japanese financial assets, understanding this dynamic provides a window into the macro sentiment that is influencing equity markets, bond yields, and commodity prices at the same time. Looking ahead to the trading week beginning tomorrow, the catalyst for a euro to Japanese yen breakout or breakdown could arrive from several directions. On the Eurozone side, any fresh economic data from Germany or the broader bloc will be under intense scrutiny. Germany remains the economic engine of Europe, and data surprises from Berlin carry an outsized influence on the euro. A stronger-than-expected set of figures could be the spark that finally pushes euro to Japanese yen above 187.00. On the Japanese side, any communication from the Bank of Japan will be analyzed closely. The Bank of Japan has been a consistent and significant source of volatility for yen crosses throughout 2026. With its policy stance capable of moving the yen by meaningful amounts in very short timeframes. Any shift in tone towards tighter monetary policy in Tokyo could see the yen strengthen sharply, forcing euro to Japanese yen back below key support levels. Conversely, a reaffirmation of an accommodative stance from the Bank of Japan would be a green light for bulls to target 188.00 with renewed conviction. The coming days are therefore critical for establishing the pair's directional bias. For those actively trading euro to Japanese yen at this moment, the consolidation beneath 187.00 calls for a disciplined and patient approach above all else. Chasing the pair into that resistance level without a confirmed break is high risk, because the potential for another rejection is very real given recent price history. A more measured approach for bullish traders is to wait for a confirmed 4-hour or daily candle close above 187.00 before committing to a long position, with 188.00 as the initial profit target. Placing a stop loss below 186.50 keeps the risk-to-reward ratio in a favorable range. For traders inclined to position against the resistance, a short entry near 187.00 with a tight stop above that level and a target around 186.00 represents the counter trade. In either scenario, position sizing and clearly defined exit rules are absolutely essential. Consolidation phases are notoriously prone to false breakouts in both directions, and overcommitting capital before the directional move is confirmed can be a costly mistake. Always trade the chart in front of you, not the outcome you are hoping for. So here is the bottom line for this Sunday, the 26th of July, 2026. Euro to Japanese yen is consolidating just below 187.00, with bulls holding the slight structural advantage and the 188.00 target clearly within their sights. The technicals lean bullish, moving averages are aligned upward, RSI confirms momentum without being stretched, and key support levels are holding firm beneath the current range. But 187.00 has proven to be a stubborn ceiling, and without a genuine catalyst to force a decisive break, patience is the order of the day. This is a compelling setup for traders and market watchers alike, one that will require close monitoring as the new trading week begins. The outcome of this consolidation phase will very likely set the directional tone for euro to Japanese yen through the early part of next week, and potentially beyond. If you found this analysis useful, please give the video a like and subscribe to the channel for daily Forex coverage. We will be back with more euro to Japanese yen updates and broader currency market analysis throughout the week. Thank you very much for watching.